Good morning, active traders, and welcome to our Trading Week Ahead broadcast coming at you live here on Saturday, February the 20th, 2021. Great to see so many new faces here from around the world. We're going to look at our market forecast, best looking sectors, some outstanding day and swing trading charts, and more coming up. Sponsored by my live Trading the Open live room, running it since the year 2000, one of the longest running rooms in the history of the world. And it is, no BS. I like to get us focused on great charts. If you're not yet a member, try me out, Trading the Open live room. You can type in tradingtheopen.com or go to which redirects now to trademastery.com/live. Let's go ahead and take a look at our broad markets. S&P, obvious resistance is 39.50, obvious support is 38.50, right? We're going to see if we're able to break outside of that box trading range coming up. Visually, a couple of signals to pay attention to. Right now, it's an indeterminate pattern. There's no candlestick reversal patterns that I can see, at least. But one thing I do pay attention to is the ratio, the proportion of green to red candles in the last 5 to 7 sessions. And if you take a look here, we have five out of the last 7 sessions were red candle days. And there's been no progress in the S&P. And in fact, a slight, although not significant, decline. So that means the market's a little fatigued. It doesn't mean it's not going to keep going up, but we may be due for a pullback. So we want to make the most of that. Let's take a look at the other key indicator we always want to pay attention to, which is our VIX, our volatility index. And you can see that it's currently right down near what? 2205 was the closing value here on Friday yesterday. So as long as the VIX stays under, I'm going to say under this MA line, under 23.5, 24, we're still in a no man's land of we can't tell what's going to happen with the market. If the VIX, however, spikes over 26, which is the 200 SMA, so that's the data point to pay attention to next week. If you're wondering whether you should go long the market or short the market or stay clear, we want to look for shorting or getting out of equities, maybe buying puts or inverses or doing some other short activity if and only if our volatility index breaks over 26. So the next door neighbor's dog even agrees. So let's take a look at some charts, shall we? Hot sectors lately have been Bitcoin and cannabis. Now, cannabis collapsed recently. Bitcoin may well do the same, or at least do a pullback. So I was in Riot from much earlier, so I did a good winning trade in Riot, but I sold 69 yesterday. I put in a sell stop order at 69 when it was right above it and took it out. So I'm out of Riot, but Riot looks like a really good chart. Another good one to pay attention to is Palantir, PLTR. Looks better on the day trading than the other. Mara's another blockchain or Bitcoin play. But one of my favorite charts that I've been mentioning here for the last several weeks has been Freeport-McMoRan. And copper is likely metals, especially copper, is especially a good sector to get into. And the reason is there's strong demand in China for copper, and apparently copper is used in electric vehicles. So there's no shortage of demand. And so I'm long FCX. I don't know if anyone else is long Freeport-McMoRan or other copper plays, but I've been mentioning it here for you guys for the last several months since it was down in the 20s. Now it's almost 40 a share. Another thing, we're just doing a quick blaze through some swing trading ideas, and then we're going to look at day trading charts and do a little Q&A. So a quick overview here. Now, the mania in cannabis reached a peak, right, what was it, last week before last, and then it sold off all last week, with a big day back here on the drop. This is Tilray, ran all the way up to 65, and all the way back down to 30. And this is what's called a mean reversion pattern, where something that does a big swoop up, it pulls back down to around the midpoint, around 50%, and then often shakes and then bounces on up to new highs. So I'm keeping an eye on Tilray to see if he breaks over 37 or so in the upcoming week ahead. You can see similar patterns in our other cannabis stocks, like Aurora Cannabis is one I also trade. ACB, it's not as much pullback as the other one. Afria is another good one, APHA. Now this one didn't pull back as much, so from a relative strength standpoint, Both AFRIA and Tilray are combining forces and merger and acquisition. So this one has better relative strength. So APHA is a really good chart for cannabis plays. You can see the strength of the trend has gone from 7, peaked at 32, pulled back down here to 20, and it may be good for a pivot. So that's one that I want to pay attention to in the upcoming week ahead. See if you can identify if you were long. Well, let's keep it simple. If you were long in this one, which I am right now, because I bought it last week on the bounce here, where would you trail a stop? At what dollar point? There's no right or wrong answers, and I'm not going to say mean things to you if you'd get it wrong, because there is no right or wrong answers. The correct answer is it depends on your time horizon and number of shares traded and the rest of it. But in general, where would be a good place to start scaling out of AFRIA if you'd been in this thing? Let's say you bought it at 11, 12, you saw it run up to 30. With some dismay, you saw it come back down to 20-ish. You don't want to hold on to it if it goes back down to 7, 8, 9, or 10. So where would you scale out of APHA? I'd really be interested in hearing what you have to say. Echo, play theme song Jeopardy. Where would you trail a stop in AFRIA, APHA? Okay, it's in 18, 19, 19, 18, 15, 24 low last week, 1850. All sounds good. Hey, Wendy, Riot, I'd wait for, I think 82. Stop at 18, low of the last green candle, 1780. Yeah, you guys all got it right. You're in the ballpark. 1824 would be where you'd scale back in. This is correct. 18-ish is the correct answer. And that's what I was looking for. So good answer. You guys mostly got it right. One thing that I teach in the live room at Trading Open is always to use a box range approach with a little more sophistication on it, because if you use a simple support and resistance based approach, you often get false breakouts and get stopped out. So you don't just simply buy new highs, you put a trigger point slightly above the high at a what we call, professional trading, we call it an inflection point. The trigger point that's likely to act like a magnet to draw in new order flow, but it's not so soon that you've got market makers gunning for stops and the rest of it. So one thing that I want to teach you is, we like to cover to coach in, is looking for a box range approach. And for all of you who are relatively new to trading, it's important to identify support and resistance. For those of you who've been around for a couple decades like I have, what's more important is how to extract money from the trade by using position sizing and scaling, and while avoiding false breakouts and weathering the storm with pullbacks. And all that is quite challenging. So we want to really focus on the charts that can do that for us most easily. And those are charts what I call clean, sharp charts, where you got a nice clean directional pattern that doesn't have a lot of shake and bounce and wiggle in it. So we want to make sure we're focused on those kind of charts. A pivot play. I bought some SCO yesterday. I think it's just like 80 shares, 90 shares, under 100 shares, but I got a little baby trade on in short crude oil because SCO is starting to bounce. Crude oil may be in for a drop, and there's lots of upside if it does bounce. And if it doesn't, if it goes back down, let's see. I want to ask the obvious, which is, where would you stop out? I bought it on the bounce. And the reason I bought it, by the way, is it was a 2-day high breakout. When it comes to position sizing or scaling professionally for swing trades, when it comes to figuring out how to enter a swing trade being anywhere from several days to several weeks or even a month or two, always buy 2-day highs, break out above the prior day's high. If it closes the day, and this is important, that's why I bought this into the close, what counts is where a price action closes, because how many times have you seen something gaps up and then sells off, or it runs up and then in the morning and then in the afternoon it runs back down again? That's no good. For swing trading, it's especially valuable to put on your trades during the last half hour of the session, like most professional traders do, anywhere from 3:30 to 4. So because what counts is the close. That's how people determine the algorithms on buy and sell programs and all the rest of the institutional money flow is based on day over day closing price values. So for that reason, I put on a trade in the short crude oil ETF SCO because it's in a 2-day uptrend, meaning it may be a reversal of the big beatdown it's been getting as crude oil has rallied. So that's risky because it's fading a strong dominant trend. This could easily go down to $3 or $4 a share. So obviously the stop out would be 7. My question for you is the second audience involvement question. We got just around 10 minutes left. Where would you scale into SCO? Let's say you pick up a few shares or a few hundred shares or whatever on Monday. Not a trade recommendation, but if we gap and run on Monday and the crude starts to go down and this goes up, where would you add to the winning trade? Where would you scale in? Because my biggest winning years have always been ones in which I've done copious position sizing or adding to the winners. It's important to take stop losses when you're wrong sooner rather than later, right? But it's even, well, that's most important. But second most important is feed your winners. You starve your losing trades, you feed your winning trades. Because I don't want to be in like 80 shares and this thing's up at 20 and I just made a fraction of the money I could have made, you know, in a couple of months. I'd rather have scaled in and make even a bigger profit. So where would you add to this trade? Let's say you buy SCO and a couple of green days in a row here, maybe start of a pivot. If I'm wrong, I'll stop out at 7. But if I'm right, that's where it gets interesting and hopefully very profitable for me. Where would you scale into this guy? See about Friday high, 1023, 830 to 850 over 10, 850, 832. If you landed, if I take a trend line on SCO, it needs to get above 9, 1030 to 1040 from Damon. I like the tight price action on the chart. Yeah, me too, Trey. That's a good point from Trey's tight price action. It's not questionable. It's not up and down and choppy. You don't know what the heck it's doing because the traders in it don't know what they're doing. They were distinctly selling it after this was iffy, right? This was up and down back until November, but it's been plummeting sharply. This may be oversold. Wouldn't surprise me if I were to put up a MACD chart to see a MACD crossover, right? I'm not going to do that because I don't need squiggly lines. I'm a price action guy. But yeah, first trade might be somewhere, a small scale in would be somewhere over 8. Where'd it close at? At 8, so something like 830, 840. But a significant scale in to double down on the trade, I would wait till over 10 because that's the, always use those 50, 100, and 200 simple moving average lines as decision support. So the 50 simple moving average line is simply that red line, and that's at $10, which is a nice even number. So I will scale in significantly over, say, 1030, and that would be my correct answer. And let's see, Glenn got it. Damon got it. Stephen got it. So a handful of you guys got it, but and Wendy's asking where do I buy SCO? I don't remember the exact price. I'd have to pull up my Fidelity account. Ask me on Monday in chat, and I'll look it up in my Fidelity account. But I bought it sometime during the last hour of the day. I just bought it cash into the close. I bought it. I should say, I bought it at market into the close. I should say. Anyway. But yeah, it may be a good pivot play. So hey, we'll see. Anyway, that's a tip. So this is how to short crude, is to go long SCO, and how to go long China, which I think is probably a smart idea, is the leveraged ETF yen, YINN. And I bought some of this yesterday as well because of the strong trend. China is likely to eat our lunch, right? Notice, please, without getting political much, when did yen really start taking off? November 4th, right? People have little confidence in the current administration being able to be a global competitive powerhouse because they're going to roll over and just try and spend a lot of money on domestic issues. So, but the point is, November 4th, the world bet on China eating our lunch, right? That led to the big gap up. Then it kind of drifted and pulled back, really took off early January, and now it's way up high as we get into mid-February up at 32. So it had been, before the election, it had been 16. After the election, it ran up to 32 to double. So somebody's trying to tell you something there. There's a trading signal there. And it's always important to, how to say, you don't want to say demonize or attack politicians or get political, but what you do need to pay attention to as a trader, which I always am, is what are the ramifications in terms of where money's going based on current politics. So we have things like electric vehicle and cannabis have run up. Also China ETF. There's a lot of different China ETFs and ETNs. I like yen because it's a leveraged one, so it moves faster than the other instruments. That can cut both ways. It could easily drop back down to 20, but it could also go up to 40 or 50. So YINN is a play to go long China, the country, large cap, triple China, YINN. So if you want to go long China like I just did, or short crude like I just did, those are a couple of plays to keep on the radar. My favorite chart, though, like I've been telling you guys here for the last 2 months or so, has been Freeport-McMoRan, with strength in copper being especially strong. FCX is a rock star of a chart, and I bought some again yesterday into the close because it was a good strong chart. Now let's switch gears and take a look at some day trading charts. We'll start with this one because it's, by the way, how many of you got a, wow, big turnout, wow, huge turnout today. Thanks everyone for being here. How many of you are day traders? How many of you are swing traders? Or how many of you, like me, ching, like to do both? Type in the word day, swing, or both. Humor me. We got a lot of new faces here. I like charts, by the way, that are good for both day and swing trading. That's a very clever tip, and that's something that you really want to get up to speed on as a member of my Trading Open live room. I like to focus on charts that are good for both day and swing trading, and that's a rare mix. Now, sometimes we cover just hot day trading charts, whatever is the random, cheap $5 gapper of the day, and how do we make the best out of a run. But I also like charts that are good for swing and day trades. So in my live room, we cover those types of charts as well. And I'm sure to cover those for you guys. Let's take a look at FCX yesterday. This is a really good example of a gap continuation. This is my favorite chart pattern, or close to my favorite chart pattern. My favorite chart pattern is previous day had a 45-degree angle. Current day has a 50 or 80 cent small gap up with a pre-market 45-degree angle, and it's up, and away. This is still good. We didn't close near the high on Thursday, but we did have a 2-day high breakout here and a little cut pattern. Looks like the letter U, and a breakout over 35.40 made sense. So, oh wow, almost everybody's both. We got a couple of swings, but wow. Hey, thanks, Mira, Wendy, Steve, Gary, Sid, Stephen, Peter, Glenn, Matt, Ed, Buzz, Ian, Doug, Robert, Ted, Charles, John, Helen, Jim, Wendy, and Robert. Almost everybody's both, the vast majority. Okay, well, that's good to hear. Now you can tell why I morphed my business away from Day Trading University to Trade Mastery, because I also have Swing Trading University, but put it all under one umbrella. So anyway, charts that serve you well, whether you're a day or a swing trader or both, is a really good advanced strategy, and that's something I teach in the live room too. From a position sizing or scaling management, you can do both. For example, let's say you buy a few hundred shares here, you sell the pullback, most of it, but let's say you buy 300 shares on the breakout for a day trade, you let it run up a point, you take most of it off the table, like 250 out of 300 shares, but you still leave 50 shares open with the hard stop down here for a swing trade. So that way you feed a swing trade as it keeps running up in your favor, but you also do hit and run day trading on an open range breakout. An open range breakout, it's a term popularized or developed by Tony Crable in commodities trading many years ago. Anyway, it's the trading the open, which is what we do. We look for nice big runs like this that are consistent. What are some other examples of hot charts from yesterday? Load was one that one of my traders had mentioned. Smart trader Mick had mentioned this one yesterday. He was in from somewhere in here and around all the way up to 6. So we like to cover those kind of charts. These are kind of random haphazard charts. This is a good example of an end of day squeeze play. An end of day squeeze, where after something runs up, the trick is it can't have been sold off all day only. It has to have had pre-market strength, which this one did. We've seen countless examples, right, of these cheap charts where they run up until 9:30 and then at the opening bell they promptly crash and burn. And usually they keep crashing and burning all day, but occasionally you'll see one that breaks to a new high and that's an end of day squeeze play, a short squeeze. So people are up here and then they shorted on the way down and they're in the money. You got an inverse head and shoulders here, right? That's trying to get this thing to stay. That's called an inverse head and shoulder. You've got a little U-shaped cup, then a large head, that's a shoulder, then the big head, then the right shoulder. That's an inverse head and shoulder. And oftentimes when you see this particular pattern, particularly when it bounces off a whole number like this one did, you often have a good trade setup, either in the remainder of the whole number here or breakout above the nearest whole number over 6. And it ran up to 7.5 into the close. So end of day short squeezes or end of day squeeze plays are one thing that you can look for in these kind of charts as well. We like to cover those in the live room so you guys see exactly what to trade. Palantir has been hot for day and swing trading lately. PLTR, we covered this one in our live room yesterday. Again, a gap continuation play. Whenever you see small gaps that take out new highs, especially above whole numbers like this one over 28, it ran all the way to 30. And for those of your live room members, remember I told you guys to sell 29.8, right? That was a perfect, or 29.7, I think it was, near perfect exit. And the reason I said to sell right there after the nice run up for our live room members was because I ran into 30, which is a decade value. And usually that's a good place to go sell, because you've got a multiple of 10, and that's a nice round number. You know, always sell like a 29 or 39 or 49, right under the multiple of 10. You may have seen one of my award-winning articles in Stocks and Commodities magazine on that topic. Always Sell Nines is the name of the article, and you can look that up at www.traders.com, which is the technical analysis of stocks and commodities website. Anyway, those kind of patterns are repetitive, and it makes a big difference when you're trying to look for a successful trade setup. Here's another quick thought. Speaking of repetitive patterns, actually, let's take a look at the spiders. One thing that was especially noteworthy, let's see if I can pull this up here. Was that Wednesday and Thursday's S&P was as close to identical as I've ever seen in my life. We take a look at the chart. Let me get this 3-day. Notice please how this pattern was the same exact one as this pattern. The big drop, this is Wednesday's S&P, this is Thursday's S&P. Friday was getting close, but it ended the day with a whimper instead of a bang. But we had the big drop in the morning. We had a bearish cut pattern, big drop, up, down, and end of day close. Here we had the same exact pattern, a bearish cup, a drop in the morning, up, down, and a big close. You could cut and paste Wednesday's chart pattern of the S&P on top of Thursday's S&P, and it'd be nearly identical, just slightly lower, right? The same exact pattern, a drop, then a double bounce, and then an end of day rally. And that's exactly what we saw on Thursday. Now, as pattern day and swing traders, you need to be observant to identify when these patterns occur, because that helps you hopefully do well in your trades, right? You're looking at capitalizing on repetitive price action. Even the little double top here, it's just amazing. I've never seen a day over day identical S&P. That helped me make some very intelligent trade decisions on Thursday. Because I told when the market was dropping down here, I told my traders in the live room, we may well see a repeat of Wednesday. So if you're in an inverses, trail tight stops down here, and that was the right play. And look for bounce longs later in the day, and that's exactly what we saw. Do you see how this pattern is identical? I've never seen a pattern this almost perfect match day over day, the same range, the same up and down W-shaped pattern, right? A big W. We saw the same exact pattern. And that's because high frequency trading programs rule the Wall Street, right? And so when you see repetitive patterns, your goal as a trader is to extract value, to make as many winning trades as you can. When you see a pattern setting up that's, say, hey, that's familiar. I saw that before, just yesterday. How do I make money from it today? And that's the type of thing I like to teach in my live room at Trading Open. More intelligent professional approach to identifying entries and exits in real time and also how to scan through all the charts and pick out, 7 or 8 great charts that have good trade setups and how to enter and exit those in real time. Look at some of these recent charts. So you got really high volatility. Charts like this, VCNX, this is one that ran up early in the day, right? It went from 3 to 9. It tripled in value from $3 to $9, stalled out right near the $9.50, right near $9 whole number, rolled all the way back down to 5. I was tempted to put on a bounce trade in this, but I didn't. Who can tell me why? I was thinking about buying, I think it was 577 into the close. That never would have hit anyway, but canceled that order because why? Here's a quick technical tip. Whenever you're tempted to buy what looks to be a bounce in an oversold stock, stop the madness. There's got to be a better way. What's a confirming technical signal you've got to see? You really need to pay attention to carefully. Make sure that you've got this easy to spot confirming technical signal before you play a bounce. And I've taken thousands of stop losses trying to buy bounces, and I've learned the hard way which bounces tend to work out, like the other example, versus ones that don't. What's missing from the thesis that, hey, this thing dropped from 9 to 5, maybe it'll bounce to 7. But I didn't take the trade because it was missing a key technical signal. And what was that? Who can tell me? Oh, thanks. Good points. Yep, Heidi got it right. And Damon and Kurz. And Sid and Glenn. All right. And Ian. All right. You guys are getting it. Volume. Good answers. Like you got a handful of you guys got it right. I didn't see a big green spike in volume. Now, one thing that you want to look at is we're trying to outwit or follow along with, I guess, more intelligently, high frequency trading algos. What is significant volume on this? Well, just eyeballing it, about 1 million shares. That was the previous peaks here. So barring a breakout above 1 million shares in a given minute, that told me not to take a bounce attempt because there's not enough shorts trying to cover / new speculative longs coming in. Ideally, a good pivot trade is one in which something has been going down like this a lot, which is good, but you've got enough volume that's a blend of both shorts getting squeezed and shorts are covering, so you got a short squeeze, plus speculative longs. If you only have one or the other, it'll usually just keep grinding down or go sideways and not be worth a trade. So you really want to look for a high volume pivot before putting on a pivot trade. So this was missing that. I didn't see any sign that this thing was going to get over 1 million shares volume. So I said, take a pass, stinky chart. And that was the right decision, right? I traded Freeport into the close yesterday. We did have a nice volume bar up here that led to a spike up, and it closed right near its prior high. So this is almost a mean reversion pivot, right? It open range breakout, pulled back down to the half, the midpoint, and spiked up. So anyway, this kind of approach, is something that can be learned. It's not easy, but it's intelligent, and hopefully it'll keep you on the right side of your trades more often than not, right? And love to have you guys be part of my live room. If you're not yet a member, we've got lots of new folks have joined recently, so appreciate it. I've got a $29 trial via PayPal. I like to put examples of a new area here that shows the difference between trial versus monthly versus annual. You can click on those and see some of the benefits that you get. Lots of examples of winners. You've seen, let me get on with it here. And I guarantee your satisfaction with the live room, so you can do that. And again, I just came up with this 10 chart patterns ebook that I just finished putting the final touches on week before last. So it's hot off the presses, and it's yours free just for trying the live room. So, and it's worth getting because it gives you 10 not so obvious patterns, right? We have gap continuations, which is obvious, but we have some more advanced patterns in there too, and you can get that exclusively as a member of the live room, in addition to all the training each day and Q&A. So I think our time is about up. My electronic device is going to tell me that in just a minute. You will hear her chime in. I looked at it. Echo stop. Anyway, that means our time's out. And friends, I'd like to see you in the live room. Do try it for a couple of weeks. I guarantee your satisfaction. It's only 29 bucks. It's going to go up to $47 momentarily or in a few days, but for now it's only 29. So you get 2 full weeks with me, and I guarantee your satisfaction. So you can try it absolutely risk-free, get my top picks each day. And one thing that I like to give as well is what I call an answer key. Well, I'll pull it up later. Anyway, in the top right, I can show you on the answer key. In the daily watch list, we have specific tickers and specific resistance levels above which to go in. So again, for educational use only, but I give you very ahead of time with lots of, before the opening bell, I give you the list, the daily watch list, and specific price levels to look for breakout above. So you get the answer key, at least my top picks, and where to paper trade, enter those, and learn from before the opening bell. And then I update that dynamically during the session. And I'll also give exits when something's looks exhausted and we follow the tape, the time and sales window live. When it starts to roll over, I say we go to cash here with entries, exits, stops, and targets, and the rest of it. So anyway, join now at Trading the Open, and I will see you guys next week. Take care and trade smart. Remember things like copper. We've got potential bounce in the cannabis sectors and a potential drop in Bitcoin related stocks like Riot, Mara, and EBON and whatnot. So what I did at least is tighten up trailing stops on Bitcoin, put in entries to get in on the cannabis and stocks, and also whatever's hot on the day. So have a fantastic week. You guys have been great. Thank you so much for being here. I'm going to wrap up now. We're out of time. I'll see you in the live room on Monday, and do join.